Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. This is Henry. Today is Tuesday, March the 9th. The time is around 4 a.m. GMT. And today we are looking at the chart of ES, S&P 500 E-mini futures, 45 minutes chart here. Now we can see that the index ended this with C of Y. This is what we call a double three or double zigzag. Sometimes people call it double zigzag. It's a complex correction. Okay, and that ended with 4, right? And then from here, the index has started to rally here. So far, we have not broken to new all-time high yet in ES, but we already do break to new all-time high in the Dow, for example. All right, and we are looking for the pullback from for ES to hold above that low from last week. Then the rally also looking like a 5 waves now. So this pullback, we're looking to the pullback to hold above last week's low for more upside here. Okay, so we've been calling indices higher in the DAX as well. If you look at our video last week, that works out very well after the 3 years pullback, and then DAX from Germany also extended to new high as well. So here, let's take a look here at the 4-hour chart to give you a context of where we are. This is just a partial label. Again, if you want to see full label in different time frames as well as setup and things like that, you can always check our service. We have 14 days free trial. The link is provided in the description of the video below. Okay, so here is the 4-hour chart. You can see this is your wave 4, Y in blue, intermediate degree, right? So this is your Y in 4. That has to be your 3, and this is your X and W, right? So it's a WXY, it's double zigzag, ABC, ABC, like I said. And let's zoom out a little bit here to give another context. So this 3 and 4 here, it could be the same cycle that started from March 2020 low. This is the COVID-19 low. Since then, we've been rallying almost a year now, and that cycle looks to be still in progress, right? Now, either this is already finished somewhere in the middle, but the correction seems to be very shallow to be ending the cycle, or else we are still within the same cycle. If so, then this probably is already your 3 and 4, and we are now in the last phase in the wave 5. Now, first thing first though, let me clarify a few things here. If you look at the structure of the decline here, right? Now, this is not what I call impulsive, right? So if people believe that this is bearish, then it is not. I can tell you it is not, because the structure is corrective overlapping, right? So the sell-off from here is a correction. So because you know the trend is bullish, it keeps making new high, there is no reason to pick the top, right? Especially considering this pullback here also has an overlapping corrective nature, right? It is not an impulse. So and then you have the Dow already breaking to new high and so on. So more likely than not, then this can follow the lead and then also can continue to go up now. But for ES, specifically for ES though, if we want to talk about technicals, then it has to break above this previous peak and make new all-time high to completely rule out the possibility of doing a double. This is another bigger double correction. If that happens, it can happen, right? Technically, you cannot rule that out from technical perspective until it breaks above that previous peak. However, you combine everything you know so far, that the Dow already break higher, right? And then also this rally, it looks to be a 5 waves or 5 swing at least. Yes, an overlap, but it could be diagonal, right? So when you combine all those ideas or all those observations, then yes, you can assume that this also can extend higher, as long as the pullback stays above last week's low. Now, There was a blue box here, and then we give this blue box to our members, and we actually give the setup to buy last week to our members in the live trading room. So now we are already what we call risk free, meaning it has already bounced, it has already rallied from the blue box, right? And so we can take partial profit, and we can move stop loss to our entry level, and then completely risk free, so that in case it breaks down for whatever reason, if it breaks down below this invalidation level, then there is no loss, because again, the blue box is basically the area that we always think that there is always going to be a good high degree chance of reaction, regardless whether we are right or wrong, whether the pullback is going to be deeper or not. Some sort of reaction can happen, which it happened already now. So now we're just waiting to see, right? For our members, we're just waiting to see if we can break above that previous high. If it can, good for us, then we're going to participate in the move higher. If not, if it does a double, then we will have to wait and see again, and look for another potential, another opportunity down below, right? Down below, because at this point, again, the only confirmation after reacting from the blue box, the only confirmation that we're not going to be doing a deeper correction is only if we break above that previous peak over there, right? Otherwise, it can become a deeper WXY complex correction again, and do another wave forward. But again, remember, we have already broken to new high in the Dow, so most likely this can also follow. All right, so that's the update for ES, and I'll see you all again tomorrow. Have a nice day, everyone.